Hey, welcome back to Confident Real Estate. I'm your host, JC. On today's episode, we're going to discuss some creative ways to invest in this crazy current real estate market without actually buying or selling any property whatsoever. We're specifically going to look at three aspects of the real estate industry that you can easily track and monitor and invest in with really very little monetary obligation. You don't have to put a lot of money into these investments to see some significant returns. But as you know, before we get into that, I'm going to ask you to hit that like button down below because I think you're really going to like what we review here in this video. I know I am very excited to share it with you, and obviously it helps out the channel and the YouTube algorithm. So go ahead and hit it. Good. Ready? Let's go. As we've discussed in recent videos, the real estate market is booming right now, and in recent months, it just keeps getting hotter. The National Association of Realtors has actually stated that as of August of this year, home sales of existing homes are up 10.5% from where they were in August of 2019. On top of that, the existing home median price for those homes that were sold is up almost 11.5% from where it was just a year ago. 11.5% appreciation in equity in 1 year during a global pandemic. That's crazy. It also marks the 102nd straight month that has seen year-over-year gains. The combination of low interest rates, lower than normal inventory of homes to buy from, and the mass exodus of people fleeing urban markets for greater open spaces and pastures has really driven the market values of homes, especially in suburban and rural markets, exceedingly high, and perhaps higher than what the true market value really is once the pandemic is over. Those prices and market values may come a little bit back down to earth in a market correction, but time will tell. The combination of these factors, however, has made many real estate investors wary about investing in new properties right now, especially with all the confusion about whether or not there's going to be a continuation of stimulus packages from the federal government and all this talk of a federal government moratorium on evictions. You don't want to buy a property that has tenants that are no longer paying rent because there's no longer a stimulus package to help their income, and now you can't evict them, and you're carrying this new property with zero cash flow for the foreseeable future until things change. But never fear, you can still benefit and invest in this market and make some magnificent returns. And we're going to show you how right now. With all the crazy wild fluctuations in the market and the uncertainty that's going around, you can still benefit by sharing in the profit of those who are doing really well in this market, like, say, new home builders. As we already discussed, prices are surging, and in some cases above what maybe the true market value really is. The market seems to keep getting hotter. According to the Census Bureau, August sales were up 5% from the already hot market back in July, and the overall sales as of August of this year is 43.2% greater than what the estimates were back in August of last year. On top of that, many new home builders are seeing record sales numbers like they have never seen, especially in the second quarter of 2020. And going forward, the actual inventory being tracked of new homes available for purchase, that inventory is a 3-month inventory, which is very strong indications for the market. And it seems, one would believe, based on those numbers, that it's going to continue looking strong going forward. Luckily for you, some of these new home builders are publicly traded entities, so you can share in their record sales. For instance, D.R. Horton. D.R. Horton was trading at a low of $28.78 in March, and now trades at around $75 a share after closing over 61,000 new homes in a 12-month period ending June 30th. Another new home builder, Lennar, hit a stock price low of $29.35 in March and has lately been trading at over $80 a share. Lennar has recently doubled its annual dividend and revised its future guidance as it foresees this trend of home sales continuing for several years to come. Lastly, Meritage Home set an all-time company record for sales this year. Their stock has risen from a low of $27.29 in March to over $102 per share in recent weeks. They recently touted a 73% year-over-year increase in new home orders for July and August combined. Now, let's say you're not as confident in the continuing growth of the new home and existing home sales, and you think most people are going to stay put, perhaps even longer than they intended to, in the houses that they currently live in. Well, then home improvement is the sector for you. With home prices on the rise at record levels, many homeowners are much more aware of their own home's current value. On top of that, being stuck at home during a global coronavirus pandemic, many people have also become aware of the limitations of the homes that they live in because they're spending a lot more time at home than they probably ever have in the entire time that they've owned that home. Because of that, home improvement and DIY projects are on the rise. Home Depot, a traditionally strong stock that hit a low of $152.15 per share back in March, is now trading at over $269 a share. Likewise, their competitor Lowe's, which fell to a stock price of $65.02 back in March, is now trading around $160 a share. Both of these home improvement giants are benefiting from the real estate market, as are the companies that make the products that are sold in their stores. So you may want to research some of those companies as well. Lastly, and perhaps most obviously, real estate agents are having a phenomenal year as the real estate market continues to surge, which means publicly traded brokerages are also having a great year as well. Back in March, it seemed like the end of the world for many brokerages, but firms like Redfin and Zillow are reporting increases in traffic and interest in properties that they have as listings, despite the fact that there still remains a low inventory of product available to actually sell. Redfin actually hit a low back in March of $10.33 a share, but now trades for around $50 a share. Likewise, Zillow stock has recently broken the $100 per share threshold. So now the biggest question is, how long will it last? Traditionally, fewer people list their homes during the winter months, and the market really heats up again once spring rolls around. However, this year may be different because not as many people are going to be reluctant to take on a move during the holiday months, since most people will not be hosting big, large gatherings for the holidays like they typically do. On top of that, it is a huge headache to take on a move, especially if you're moving school districts while your child is still going to school every day. But since everybody is doing school remotely in many parts of the country, it's not as big of a headache, especially since your kids aren't going to feel like they're separated from the friends that they're already separated from. All that being said, if inventory remains at record low levels, then existing home sales could really start to see a slowdown. And of course, there's always the worry of foreclosures because mortgage deferments are coming to their maturity. Many people enacted 6 months deferments 6 months ago. So if the economy continues to lag, mortgage deferments aren't increased, and stimulus packages aren't forthcoming, we could see a slight downturn in the real estate market from the hot summer months that we just experienced. For the time being, the residential real estate market is very strong and providing a much needed boost to the real estate industry. I really hope you enjoyed this video and got something out of it, because I think the moral of the overall picture of this video is that if you stay attuned to your real estate market, both locally in your area and on the national level, there will always be opportunities to make money in real estate. You just have to be attuned to what the market's doing and keep yourself in a position to react to it and be proactive and not reactive. Proactive, not reactive. Again, I thank you for watching. I hope you hit the like button already, but if you didn't, hit it now. Hit subscribe while you're at it, and, follow us on Instagram. Why not? Let's go for the trifecta. I appreciate it, and I will see you next time here on Confident Real Estate.